Hi, everyone. Good morning, good afternoon, and good evening to all our participants from all over the world. I see there are people from Malawi, people from Zimbabwe, Nigeria, and many other countries. And welcome to week 2 of our NTEEP training. So, today we're going to be talking about financial management for startups. Before I go any further, I would like to thank our sponsors. These are Nonfro Technologies, Africa's Business, Ubuntu Soft, and Spirit TV. We thank them for their continued support. So today, as we're talking about financial management for startups, we have our guest who is Mrs. Irislyn Wilson. Welcome, ma'am. Before I give her the platform, I would like to just read a short biography about herself so you can get to understand who she is, where she comes from rather, and what she's doing. So Mrs. Wilson is an entrepreneur and fellow of the Association of Chartered Certified Accountants, ACCA UK, and holds an MSc from the University of London. She has served on the network panel since 2017, holding various leadership roles, including Vice Chairperson from 2019 to 2020 and Chairperson from 2020 rather to 2022 of ACCA Ghana. So Mrs. Wilson has established herself as a successful business leader since 2012 with 12 years of entrepreneurial experience. So Mrs. Wilson has a certificate in radio and television presentation from the Ghana Institute of Journalism. She briefly hosted weekend morning shows on Radio Gold on women empowerment and the savings and investment culture. Mrs. Wilson works in the audit department of TF Financial Services, a subsidiary of the Teachers Fund. She is currently the deputy to the head internal audit with over 11 years of working experience. Prior to joining TF Financial Services, she worked at ACCA Dankwa and Co, which is an audit firm, as a secretary and accounts officer for 4 years. Her interests include reading, swimming, sports, and dancing. Welcome, Mrs. Wilson, and we look forward to learning more from you. The floor is yours.
Thank you very much, Nadia. Good morning, good afternoon, good evening to all of you. And my name is Iris, as Nadia has rightly said, and I'm so passionate about startup businesses because from where I come from, it's not easy to start up your own business, whether as a manufacturing company, whether you are going into buying of goods and also doing services. It's not easy. So as an entrepreneur and I've been able to start something and it's still successful and it's still ongoing, I'm very passionate to also walk you through some of the journeys I took, some of the mistakes I committed, the challenges that came my way, so that you also help you to build up yourself financially. So I believe we can start, and we'll be looking, we have our contents, we have about 11 topics to quickly look and share with you all, and you are all welcome. And we'll first have a look at understanding financial management. So when we say understanding financial management, what are we saying? We are saying that financial management involves planning, organizing, controlling, and monitoring financial resources to achieve your organization goals, your objectives that you have set for yourself. Why is this so? Every business that you are going to start, it's going to involve money. Even an NGO needs money to run. But as a startup business, you are looking forward to start a business that you want to earn financial money, you want to earn profits, you want to make profits. So if you are unable to manage your finances well, if you are unable to plan your finances well, if you are unable to control the finances that you have, it means your business is not going to survive. Your business is not going to stand the test of time. You would have to make informed decisions in whatever step you take from the very first beginning, ensuring that you have liquidity of cash so that you'll be able to achieve financial stability. If you have financial stability, your business will be successful. Your business will be successful in any if any challenges comes your way. So some of the things we want to look at is setting up a financial system. Before you start your business, you will need to set up a financial system by first looking at proper bookkeeping. It is important to maintain accurate and up-to-date financial records. Many people will be like, okay, I've not been in the financial sector before. I don't know how to do this. It is simple. If you even can get this softwares to help you, which are QuickBooks, or you don't have the money to start, because for my side, when I was going to start my business, there was no resources. I didn't get grants or special funds from anywhere. I needed to start it up by myself. So I needed to save some money. So the simple system I put in place was using Excel. Excel is very relevant to everybody. Everybody is familiar with Excel. So you can start with Excel. Whatever you have, any income you have, you record them. Any expenditure you also do, you do what you record them. Just the basic proper bookkeeping. With time, if your business grows, you will be able to get people to help you to do good bookkeeping, to help you to do good bookkeeping. And when you set up your system too, you need to have financial controls and procedures in place. You establish controls so that you are able to prevent fraud or any inaccurate financial reporting that may come. You may never know. Some startups, they have the money already to start up the business. Some can be held by their parents. Some can also be held by other organizations, institutions. We will talk about that in the other chapters. So you need to have controls in place. My business that I started with mobile money. And the mobile money business is such that if you do not have controls in place, it is money you are working with day in, day out. The slight chances that someone can take your money away without you realizing. So you should start keeping records of all money that comes into your hands, record income, record expenditures, and put controls in place that, okay, if you receive this money, whatever you use it to do, account for it. Whatever you use it to do, write it down, put it down, so that you ensure that you have accurate financial reporting systems in place. If you have done this in place, then you can look at budgeting and forecasting. This is a new business that you have created and you have started. So you take a step by step approach to create a realistic budget. Why did I say realistic? Sorry, you can't compete with those who are already in the industry that you are going to start now. You can't be like them. So you can't say that maybe I'll use examples of companies in Ghana because I am in Ghana and I'm more familiar with that. Maybe you have a company like MTN, who is a leading company in Ghana. Then you are like, okay, if I want to be like MTN or start up a company and be like MTN, I'm going to do what MTN is doing. It is not going to work for you. Do what is within your budget, do what is within your limits. The money that you have, that you are starting with, that is what you have to. Sorry, my slides. Okay, my slides are back. So you do a budget, create a budget, and align all the information necessary by looking at including initial costs, how much it's going to cost you to start this business, and any ongoing expenditure that you are also foreseeing in the future, and the projected revenues you would want to achieve in this startup business. You also have to manage your cash flows, as I have said it earlier on. Maintaining a good cash flow position reserve for the future is very, very important for you as well. So you need to do what? Manage your cash flows. Every money that comes in, every money that goes out, you need to do what? Manage them well. Then you do a financial forecasting. How do you do the financial forecasting? You look out for methods for forecasting future financial performances, including scenarios for planning and what? Sensitivity analysis. You are forecasting that in the next 1 year, don't go 5 years. You are just starting up. The possibility of you breaking even is also high, because when I say break even, when you start up a business, whatever cost you put in and whatever you were expecting as profits, maybe you do not make profits, but you break even at a point that you didn't make a profit, you didn't also make a loss, so you break even. So when you have the financial forecast in place and you know you have projected some profits that you have envisaged you'll be making, and you didn't even make it, you know that you get close to making it or you break even, and you will not be at loss at all. You will not be at loss at all. And when you reserve this cash flow methods and you have all of them in place, when there is any unforeseen expenditure, you are able to have extra resources to take care of them. Along the line, when there is an advantage of any new opportunity, like I said that I am operating a mobile money shop, but along the line, I wanted to also bring in vending of electricity. So the vending of electricity, it was such that I needed to buy some equipment to start. If I had no cash flow reserves around, I wouldn't be able to start the electricity vending that I wanted to do. So, in the same small space that I had, I knew I could do other things to attach to my business. And that is the spirit. You do not limit yourself to only what you are starting at. Along the line, there will be other opportunities that may come. It's the same way people who those who deal in fuel has other byproducts, so they get other benefits from it. The same way, when you also start up a company, there may be other opportunities that may come your way. So if you have set up a budget, you have cash flow management procedures in place. Whenever there is an unforeseen expenditure, you are able to take care of it. And when there is any advantage, you are able to take advantage of that opportunity as well. Then we look at funding and investment. As a startup, the main major resources you need is funding. And when we are looking at the types of funding, we consider funding which includes bootstrapping. When we say bootstrapping is money that you have saved yourself. If you do not have people to sponsor you or invest into your business, it means you would need to work at a place or start some business to save money yourself. Or in your community, your friends, your family, they could also raise some income for you to also start your business. Then we have angel investors. Angel investors are people who are worthy individuals and they are ready to invest in startup businesses in exchange for equity. They are there also. So you would need to make inquiries and know about all these people in town, all these people who are there to help up startup companies, and write proposals, write a do pitching videos, do pitching project notes, and give it to them and let them believe in whatever startup you have. That reminds me, Access Bank. I believe they are in most of African countries. I know they are in Ghana, I know they are in Nigeria and other African countries. There is this pitch a tone that they do for startup businesses. If they do it every year and they give about 50,000 Ghana cedis for Ghana here, they give about 50,000 Ghana cedis every year. So you can be searching Access Bank websites each and every time so that whenever they start it, then you pitch your project, you pitch your company to them. If you are able to win, they select about 50 people and they give the first people 50,000, the second 20,000, the third 10,000, and other benefits that you benefit from, um, um, other opportunities you can benefit from. They also do training for people to learn from. So if you are able to come into contact with such people, you can get enough funding to start up your business. We also have venture venture capital, or you can get bank loans or grants depending on the type of startup business that you want to start. But if you are going in for a bank loan, you should be very, very sure whatever money that you are taking from the bank to start your business with, you are going to make profits. You are going to make profits because bank loans comes with interest. And if you default in your payments, it is going to affect you dearly. It's going to affect one, your credit worthiness, your credit rating, depending on the country you find yourself. It is also going to affect your finances. It can collapse your business as well. So if you are going for bank loans, which are tied to interest, you should be very, very sure of what you are going to use the money for. If you do not use it for the intended purpose, you would find yourself in a much bigger problem. Then you prepare for the funding. When you are preparing for the funding, like I said, you need to have a business plan that's pitching your business. Then you have basic financial statements. We will delve into it in the other chapters. Then crafting an effective pitch, which I have said about earlier on. Then managing investor relationship. If you've had people to believe in you, to fund you, to invest in you, you need to be transparent with them. You do not need to hide anything from them. You need to be transparent with it and keep a positive relationship with them as well. If you are hiding information from your investors, sorry, and they get to know, they are not going to trust in you anymore and they are not going to support your business. Along the line, I've had people who have come to support my business. I had friends who believed in me because I was very transparent with them. I do not hide anything from them. When I'm making a profit, they know. If things are also not going well, they know about it. You report to them. Basic financial reporting, you report to them, then they trust in you and they would even push you more. I have friends that if I'm sitting down and I'm like, oh, I need about 50,000 Ghana cedis, I have a couple of friends I can call and tell them that I need 50,000. Can you get it for me? And within a matter of hours, probably I can get it, or maybe the next day. It's because I have created that trust in my investors. So anytime I need financial help, they are there to help and support me. Then we will look at the financial statements and analysis, because if somebody has invested in you, you need to report your finances to them. You need to report how the business is going to them. So you can do the basic and the key financial reporting, such as income statements, recording your income, recording your expenditure, as simple as that. Balance sheet, which is now a statement of financial position. You would need experts to do that for you. And cash flow statements. You will need to also show your investors that this is how you've been able to manage your cash. This is how you've been able to manage your cash. So if you are unable to pay external auditors or chartered accountants or accountants to do this simple financial statements for you, that is why I said you can either get QuickBooks, which is not too expensive, or Excel. Excel can do the perfect job for you. When I started, I didn't invest it in any QuickBooks. I used Excel sheets. Every income I get, I record it. Every expenditure I make, I record it as well. So at the end of the day, if I am unable to do a proper financial statement, I have the records, the basic records that someone can look at and prepare the financial statement on my behalf. So if you keep these records in place, in the near future, you would have an auditor or a proper person who is fit to do this job for you as it's supposed to be. Financial ratios too would be is something that also comes in, so that it will also tell about your profitability and liquidity ratios. It is important to calculate these financial ratios so that you are able to tell your profitability, like I said, and liquidity ratios. Assuming, like I said, you have you have start up your business, and you are comparing yourself to the big businesses that are already in the system, you will not be able to make it like they are doing. But if you compare yourself to people who are also startups like yourself, for me, I in the future, I may look at starting up a microfinance or a microcredit business. So I'm not going to compare my financial revenue or financial statements to EcoBank or Zenith Bank, because they are big, big companies. But I can look at the small microcredits like Quick Credit, Bills, and other institutions who also started, how they got there, and how they made it. Then you can also grow gradually looking at them. And you also have to analyze your financial health by assessing the company's financial health and performance through trend analysis and benchmarking. Like I was saying, you do not benchmark yourself to big companies who are bigger than you. You benchmark yourself to smaller companies just like you, or who have also just start up their companies. Then cost management. If someone invests 1 million cedis in your company and you are unable to manage your cost effectively, the money is all going to go waste. It is all going to go waste. You have to categorize your fixed and variable costs. Fixed costs are costs that you would incur them irrespective of what you do, but variable cost is what you can actually manage them. You can manage them if you know their impact on your business. If you know that this costs are costs that is not going to help your business, you do not need to incur them. Only incur costs that is going to bring profits to your business. Manage your costs. Put cost controlling strategies in place, such as regularly reviewing your expenditure. Review your expenditure, your cost of operations. You look at your transportation, if transportation is part of your cost of operations, uh, items that you buy to support your operations, purchases that you do to support your operations. If the some of these expenditures are really not directly linked to your business, you need to cut down on some of these costs which are not helping your business. And when you are cutting down on these costs, remember that you also do not factor your personal costs into your business. Most African startup companies are sole proprietorship businesses, just like myself. So, what happens with our cost management problem is because we usually spend the company's money for ourselves. Our personal expenditure, we take it from our business because we have not aligned or streamlined our business income and expenditure from our personal money. So the best thing to do if your startup company is the only work you are doing. I work with a financial institution, so I earn salary. But if you are not working anywhere and your business is the only thing you are doing, you would have to pay yourself salary. You would have to pay yourself salary, a good salary, or let's say an appropriate salary. so that you keep your salary away from your business, so that whatever you spend from your salary and not your business money. That also helps you to reduce the burden that you put on your startup business. So you reduce costs without affecting product or service quality or customer satisfaction. If you are thinking of reducing costs, you need not to compromise on the quality of your service. You need not to compromise on the quality of your product. If you are into manufacturing, you need not to compromise on that as at all. So some of the strategies I used to reduce my cost was that when I start up my business and I wanted to pay for rent, I realized if I pay for a 5 year rent, I was paying about 180 cedis per month. But if I was going to pay for 2 years, I was going to pay 250 per month. So looking at it, I realized if I pay for the 5 years, I would save the difference of about 70 cedis. And also, when there is any inflation within the 5 year period, it is not going to affect my rent because I have paid 5 years in advance. So that was what I did. So I saved myself from future inflation expenses that I didn't need to incur. These are also some ways to reduce costs. I started with a common ceiling fan, and I didn't buy an air conditioner. So the fan was able to manage the place depending on where the location of your business is or how the environment or the ventilation is. If air conditioning is not something you will need from the beginning, you don't need to buy it because it's also going to incur, you're going to incur electricity costs on the AC. So if you take that out, you are going to save some money in there. Then we look at revenue management. You have managed your costs. Now, how do you manage your revenue as well? You take different We have different pricing models for those of you who may be starting up a manufacturing business or a business that you are self-employed into trade or into artisan or anything. You either look at the cost that you incur in producing the product or producing the item or the goods that you have, then you add a markup to it. Then that could be how you could price your products. Or you can look at the value-based pricing. The value-based pricing system is that you look at other products in the system that has been priced the same. You look at the value that you have on your product. So let's assuming that if you develop a software or a productivity tool that saves a customer about 5 hours per week of whatever they are doing, the customers are willing to pay, let's say, 50 Ghana cedis per hour. So the software's value, you can say that, okay, if they are able to pay 50 cedis per hour, then I'm going to price it at 250 cedis per week. So that is about the value-based pricing. Then you diversify your revenue streams by creating multiple revenue streams to reduce dependency on single sourcing. Like I started earlier on to say that when you start the business, there are going to be other opportunities. When I started the mobile money business, it was only mobile money. But along the line, I realized I could add agency banking. So currently, we do agency banking for about 8 big banks at our same shop. We do agency banking. So you can do deposits and withdrawals and open accounts for other banks in our shop. We also do sell ice cream. We buy ice cream from the distributors and we sell them at retail pricing. So the income we are making from that business is not only from the mobile money. We are also making some from the agency banking. We are also making some income from the sale of the ice cream. I have friends who are selling products, then I tell them, okay, bring some to my shop and let me sell. They bring it, We sell, we also make some profits there. So you don't depend on a single income stream. If you have diversity, you make more profits, you make more money. Then you monitor the sales performances too by tracking your and analyzing your sales data to optimize performance. You can leverage on customer CRM, customer relationship model. There are softwares that you can capitalize on to ease your work. Our mobile money business, we realized that with time the business was growing, it's becoming big. So what do? I got a software that helps us to do the mobile money business. So it makes it faster, it makes it easier, and we are also able to tell what goes in and what goes out from the business. So as the business grows, you also need to grow with it. It gets to a place, the data you are working with or the information you are working with becomes so huge that you can't manage it alone. So you will need assistance from softwares. You can get friends, you can get family members who have knowledge in IT. A lot of people are developing a lot of softwares now. They can get you a customized software, small one. You don't need to pay a lot for these things. I paid something small and I had it to manage my small business. To manage my small business. So that is the other way you can also be tracking your performances as well. Then, as a startup business, you would have to consider taxation and legal consideration in your country. Tax obligations, you need to understand the tax requirements for startups, including income tax, payroll tax, sales tax. I have people who manage my business for me. So I do pay them salaries, I do pay their taxes. We pay district metropolitan taxes. We pay taxes on the income that we earn. So wherever you find yourself, wherever you are, you need to know the tax implications that will affect your business. Consult with people, consult with friends, ask them how much it will cost. Go to the tax revenues, ask them, inquire from them, and know all the tax obligations. You should know that tax evasion is illegal. So you do not need to evade tax when you start up a business. But tax avoidance, there are ways you can avoid tax and save some revenue, save some money. And that is legal. There is a legal way to avoid tax which will not affect your business. Then you look at the legal structures. We have different legal structures. Do you plan to be a sole proprietorship business? Do you plan to be in partnership with someone, or you want to register your company as a corporate entity? They all have various ways to register these companies, but the most simplest one is sole proprietorship business. My business as well is a sole proprietorship business, so it has little tax and legal implications. And seek professional advice from friends, from families, from colleagues, from people you know they know someone. Always seek professional advice, consult with them what you are supposed to do, what you are not supposed to do, so that you know how to manage the taxation and legal consideration in the industry that you find yourself in. The next one, we look at financial management. So in the financial management, you would have to identify the type of risk that you may face in your entity. We have market risk, we have credit risk, we have operational risk, and you consider their potential impact on your business, because this risk can affect your liquidity. In my mobile money business, most of the risk we face is fraud risk. People can scam you, they can dupe you, you can be robbed at gunpoint. We hear a lot of stories about mobile money vendors being shot and killed, their money taken. These are all risks you need to know. You need to consider them when you are going to start up the business so that you put in place mitigants. You put in place mitigants. When someone puts a gun at your head, you give them whatever they want so that they can go with it. Then you know you saved your life. But something like robbery, you can do insurance for your business. Some insurance are not expensive. For we, the mobile money vendors, the maximum insurance we pay is about 250 Ghana cedis. Some also take 200. So you can do it for a whole year. Insure your businesses, insure your place of work, especially if it involves money. Insure them so that in the event of any risk crystallizing, you have something to secure yourself. You can also consider diversification and hedging of your risk. Then you put in place a emergency fund. As I was saying that it is important to maintain an emergency fund to cover unexpected expenses that may come your way. For us in our mobile money, some of the unexpected emergencies that may come would be that there may be network failure where you may be, or you would have when you are unable to the mobile money is such that we take cash in and we give cash out. So sometimes all your cash may get finished, so immediately you need to go to the ATM or the bank to go and take more money from the bank. If you don't have any extra income on you, what are you going to use as transportation? Because it is risky to take public transport, you would need to go with a taxi or a private car, which may cost you more. So you need to have emergency fund to cater for some unforeseen or unexpected expenditure that may arise in the future of your business. Then you consider technology and the tools you need to build your startup business. Some of the financial management tools you identify will be financial management softwares, such as we have some budgeting apps, we have expense trackers, we have financial dashboards. Some of these apps are for free. They are on Play Store or Apple Store. I'm not so sure about the Apple Store if they are for free, but I know some are on Play Store. There's one called Ozo, OZE. They are able to track your expenditure. You can input your expenditure if you make some sales. If some customers are owing you would be able to see them all and you will be able to track them. So some of these free apps, take advantage of them. Go to Play Store, type financial management tools or free apps, tracking expense trackers. Be typing them and be searching. Do more research so that you know about these technologies to help your business. Because startup businesses, most often, we do not have people supporting their business. It's your personal money that you are starting up with. So you need some of these free things to help you. Then in the event that you make it, you break through, you are able to invest into more robust and expensive software and financial management tools. Then you look at the security, the data security of the startup company. It is important to protect your financial data through secure systems and practices. These same softwares are things that will also help you to manage the data or the information that you come with. For our mobile money business, we need to abide by the data protection information out there, because when people come to you, they bring us their ID cards. They mention their telephone numbers to us and other very important and vital information. And you can have about 4 or 5 customers standing there. If a customer mentions their number, somebody hears it and they can call them later to scam them of their money. And that is what's happened at some other mobile money places. So you would ensure to protect the information and privacy of your customers. So we provide books or papers that these customers can write their telephone numbers on to do the transaction that they want to do. With this, you have protected the security of your customers. You have protected whatever information they are giving to you, and it is not in the public, because this, depending on the industry you find yourself, you can be in big trouble if you are in breach of data security. You can find yourself in a very big trouble. So we have really delved into all the very, very important and necessary parts of financial management for startups. And I believe I am within time. So I will take questions at this time. If you have any questions that you would want us to address to you, you can ask your questions.
Okay. Thank you, Mrs. Wilson. Please
Thank
do send through your questions. If you do not, however, have any questions, please do not forget to send your comments in the comment section below. So as we are waiting for your comments, I am Nadia Sadiki and I am your moderator today. We'd like to thank our sponsors once again for their continued support that is unwavering. So our support are Spirit TV, Nomfro Technologies, Africa's Business, Ubuntu, and Ubuntu Soft. We would also like to thank you as participants for coming through today and participating and being patient with us from all over the countries. I see there's Zambia, there's Malawi, there's Nigeria once again, there's also South Africa, Sierra Leone, and many others, including Tanzania. So I see there are a lot of people who are asking about the attendance link. It will be available below the description box, so you can just check through and then it will be given to you. So now entering into the question section, Khalid Kole is asking, for a perfect financial management, how can we mitigate a financial risk under budgeting?
Pardon me, come again.
Okay, so for a perfect financial management, how can we mitigate a financial risk under budgeting?
Okay, so budgeting is basically what you have planned to do. And when there is a financial risk, you would need, he said, for a perfect financial management, how can we mitigate a financial risk under budgeting? So
Yes.
if you have budgeted for something and there is an unforeseen risk, you can mitigate it by diversify into other financial. If it's the financial risk is has to do with resources, look at other ways you can get resources to support your company. Look at other ways, whether it will be from friends, it will be from an investor, or it's going to be a bank loan that you are going to take because you didn't expect that to happen and it has happened. There is nothing you can do about it. So you need to get other ways of raising funds or money into the business.
Okay, thank you. So Yusuf Kantoma Samuel is asking, he's saying, I need more light on the legal way to avoid tax as earlier stated by you. Is there something else you can give?
Please come again. I'm not hearing you well.
It's not so clear.
Yes,
Can you hear me now?
yes, I can hear you.
Okay, so he said he needs more light on the legal way to avoid tax as earlier stated by you.
The legal way to avoid tax. Okay, I'm going to use my, okay, 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 I've seen it. I'll use mine as example. Like I said, tax avoidance is illegal and tax evasion is illegal. So in my business, if somebody is coming that, or I'm coming to send money to my mother, and there is e-levy tax. There is a tax of if I'm sending 10,000, there will be a tax of 100 cedis that you need to pay if you put the money on your phone and you send it to them. You are going to pay 100 cedis. So I can tell you that the legal way to avoid it is to give it to a vendor to send it for you. If the vendor send it for you, the vendor is going to charge you about 20 cedis or 30 cedis, which is less than what you would have paid. So instead of paying 100 cedis for tax, you are now paying a 30 cedis or a 20 cedis. So legally, you have avoided tax. Legally you have avoided tax, or some other people would also let you go and take the money from another means. So from my business side, that is the way we avoid the tax. So you need to also understand the business you are in. That is why I also say seek professional advice. If you have people in the industry, connect with them, network with them, be asking them, be talking to them, so that you also know every business and how you can legally avoid tax, so that you consider that aspect as well.
Okay. Thank you for the answer. John and Michael is asking for businesses such as a food stuff and provision store that is not registered, who does daily buying and selling. Is it necessary to do a bookkeeping? Wouldn't that be cumbersome?
No, it wouldn't be cumbersome at all. It wouldn't be cumbersome. So with that, yes, you have a big store, you are selling food stuff daily. So what you can do is weekly stock take. So with the weekly stock take, how you can manage it is that when you buy your provision items, buy them in bulk. Then when you buy them in bulk, record them. When you buy them in bulk, record them. I don't know the kind of provisions you'll be talking about, but let's say if it is toiletries, you buy them in bulk, then you record them in bulk. If it is
Mm.
let's say rice, if it is tin tomatoes, whatever, you buy them in bulk, record them. Then on a weekly basis, you do a stock take. So when you do a stock take, if I bought 10 bags of rice and now I'm left with 5 bags of rice, it means I've sold 5 bags of rice. I bought the 10 bags of rice at 1,000 cedis and have sold 5 of them. So I should be left with, it means I should make a profit of 500 cedis plus the profit, I should make the cost of 500 plus the profit I made on that money. That is the same way I used to manage the ice cream business, because ice cream is in different varieties and things. So when we buy them in bulk, we list all of them that we buy them, especially products with the same prices. That's how we do it. Then at the end of every week, we do a stock take. At the end of every week, we do a stock take to check which one has been sold, which one is left. Then we can add on or subtract. With that, you are able to tell how much profit you've made on your money, and it will not be cumbersome. If you don't do that, you are unable to track your business, and you may end up spending your business money for yourself.
Okay. We have a next question. It says, can I save from my profit as reserves instead of adding back to my business capital?
Yes, you can, but I personally I would advise that you put part of your profit back into the business. Put part of your profit back into the business because it will grow your business.
Mm,
Assuming I started my business with 20,000, if
mhm,
along the line every week I get short of business and I make profit of 10,000 and I put all in reserve, the reserve, I
mm,
may not be making profits on the money in the reserve, even though you need to have the reserve. So I can keep 5,000 in my reserve and add back the extra 5,000 to my 20,000 to make it 25,000. If I was making if I was making 2,000 on the 20,000, It means I'll
Mhm.
make 2,500 on the 25,000. So my profit has what? Increased. So for me, I even do almost 100% of putting back my profits back into my business. And it works perfectly for me. But you may also consider what works well for your business. But it is good to put part of your profits money back into your business. It is good.
All right. The next question reads, can my business bank statement serve as financial document to show to a prospective investor?
Yes, please. It perfectly does well. And okay, I'd wanted to mention on this bank statement too. When you're an initial startup business, look for banks that do not charge so much COT, commission on turnover, on your money, because it's they are small monies, but they make up a lot at the end of the year. So make your enquiries, check the banks. For me, I even started with I did two personal accounts, and I knew I was run because mine was a sole proprietorship. I was using one of my personal accounts, which I made sure it had other benefits like a checkbook and other things that I would need to run the business. So I was using that to run my business. So I was not incurring any charges at all. So anytime I need to present, it's in my name. So I present that as my financial records, and you could see that the money is going in and the money is coming out are all for business purposes. Are all for business purposes. So I believe in the savings account too more than the business account. But if you have the business account and you have the financial capabilities, that is very fine, and it serves as a document for your investors. It really helps.
Okay. Then Esther is asking, if you have started like 3 years ago, but you don't have any financial records to show and you are applying for loans, how can you generate the financial records for the application?
If you have started a business for 3 years and you have no
Yes.
financial records at all to show, wow. If you say generate financial records, then you are trying to say probably forge financial records, because truly you don't have the records. So to me, my best advice is start now. Start financial recordings now. Start financial recordings now. But there is something you can use as average or assumptions. If you know, in my business on a daily basis, I make I sell maybe 1,000 cedis of my products, then you can use that as an assumption to build on the financial records. But you would I for integrity and ethical reasons, you would need to tell the bank that you use an average or anything, because I would not be appeased to forge financial records to a bank to apply for a loan. It is not good. And if you are found out, it can have problems for you. But you can use averages based on your business. If you've been in the business for 3 years, it means you are very sure. Or you may be using mobile money, or you have a bank that your transactions go through. You can use that as a source of evidence to the bank that on average this is what you make, so this is what you have used to prepare your financial records. So I would advise that from today, start recording all your finances. Take notes on your phone, anything at all, Excel, and type the information in there. One day you will get someone to put them together for you and make them good.
Okay, thank you. Godwin Emmanuel is also asking, is it okay to have two financial statements or reports, one for tax and one for internal use, in order to enable you to pay less taxes because of the huge burden of taxation on us SMEs?
For ethical reasons, no. For integrity reasons, no. You should keep just one report, and the true and accurate reports. The true and accurate reports. So, like I said, look for ways to avoid tax. look for the legal ways, the good ways to avoid tax. So like I was saying that someone was supposed to pay a tax of 100 cedis, but we find a way for the person to pay 20 or 30. It is legal. So that way my taxes has reduced. There is no way for me to have two financial reports. But I know a lot of people do keep two financial reports, one for the tax, one for the bank, even not just internal use, one for the bank. When they are going to the bank, they have good financial reports with huge income, with huge profits. And when they are going to the taxman, they have financial reports with very low profit margin so that they can pay a lot of tax. If you've really done the work and you've earned the profits you are saying you earn, then paying the tax shouldn't be a problem. Always strive to be of integrity and be ethical.
Okay. Um, Let me just check if there are more questions. Okay. Tepo Pelesi is saying, how important is acquiring assets and how does this help the business? I know it adds value to the business equity. I need more information.
Yes, generally, if you acquire assets for your business, it becomes your property. It becomes part of your business. It becomes part of your ownership, things you own to yourself. Like I was saying that I would use my mobile money business as an example. I have bought computers, laptops, chairs, if I've bought fridges and all that, they all become assets that the company own. If you are valuing your company one day, you will need to value all those other things too. And it will be an income to you. It is money for you. So it is good to acquire assets, but good assets, not just any assets that will not help your business. Not just any asset that will not help your business. If something that you can do away with, just do away with this. Or if you can rent them for a short period, you do the rental, then you let it go. But if it's something that you need it to run your business each and every time, then it is good to acquire assets for your business. At the end of the day, it is still yours.
Okay, thank you for that answer. The next question reads, is it advisable to employ financial analysts early as a startup?
If you have the financial means, yes. If you have the financial means, then yes, it is good to go. If you have somebody sponsoring your company, if you have somebody investing in your company, then it's good to have. But from my side, I would say I was fortunate that I am a financial person. So that was what helped me. But I do advise a lot of my church people, other people who come to talk to me about financial management and all. It's for free. I don't charge them anything. I don't charge them anything. And I am also here right now that we've had this session. My contacts can be given to you or my email address. If you need any financial help or assistance, you can reach out to me. I'll be willing to help you at no cost at all. At no cost. So if you can get people to help you, to support you, then go in for it. If you have the money to pay them, yes, then that's the perfect thing to do. But if you don't have the money, then look for other people who have survived in those industries, who have made it as a startup company, to learn from them and get free financial advice.
Okay, thank you for that answer. Um, let me check if there are any more. Yes, there is. There are more questions rather. Um, okay, so Mary Adeleke is saying, well done, Ma. But my question is on insurance. As a startup, is it not expensive for us to insure when our capital is small?
Yes, it is expensive to do insurance. So that is why you have to look at the insurance packages available to you and do a market research. Market research is you know the insurance companies, call them, go online, search for the insurance companies, about three or four of them, call them and ask each of them, okay, if I want to insure this business, how much is it going to cost? The reason why I said that the insurance for our mobile money is between 200 and 250 was I made enquiries and I realized that if they insure you of about 20,000 Ghana cedis, some take 250 for the year and some also take 200 cedis for the year. So I went in for the 200 cedis a year because that was cheaper and it covers the same thing. If my company suffers any robbery right now, they will reimburse me with 20,000 Ghana cedis. So I would look at what I will lose compared to what I am paying. If I pay 200 cedis and I'll be able to recover 20,000 in the event of robbery, then I'll go in for the 200 cedis. So look for cheap insurance that still has the capability to fully cover your business or whatever you are insuring against.
Okay. Thank you. So you might be asking yourself how to join the NTEEP community. You should go to our Facebook pages. A step-to-step guide has been set up there, so it will be easier for you to go through it. And this brings us to the end of our question and answer session. Thank you so much, Mrs. Wilson. It was such an insightful session with you. We learned a lot, and we're surely going to have thriving businesses in the coming years.
Sure,
Um,
sure, sure.
okay, I would like to thank our sponsors once again: Nofro Technologies, Africa's Business, Ubuntu Soft, and Spirit TV. Thank you so much to our participants. Thank you so much, Mrs. Wilson. Once again, we have many
Thank
thanks
you
in our
too,
hearts.
Nadia.
It can never be enough. And we hope to see everyone else tomorrow, same time and same place. We will be talking about personal branding, and we wish everyone a good day. If you are looking for the attendance form, it is usually available at the end of the session under the description box. So please do not forget to fill that in. And thank you, everyone. Please do have yourselves a good day.
Thank you too. Thank you, everyone.